Joining us now is Markus Rosgen. He's Chief Asia Strategist at Citigroup, and of course, it's not just the US markets. We've got all these negotiations in Europe going on as we speak as well. You are an Asian strategist. You feel like one?
Not really. I mean, most of the meetings you go to, you tend to spend probably 3/4 of the time discussing Europe, and quite often it's quite eclectic. You know, what's Merkel going to say next? What's Sarkozy going to do next? All things which tend not to be amenable to research, but that's where you spend most of your time discussing things. You know, all the risk parameters. What if it blows up? What if it doesn't? What if A leaves, B leaves, C leaves? No one leaves, that kind of stuff.
So what's the sort of feeling you get from the people who are asking you these questions? I mean, how worried are they?
I think, you know, people, this is a year of worry. I mean, if you think about it from the beginning of the year, people worried about too much inflation in China, then too much tightening, then you had the Arab Spring, what would that mean for oil prices? Then you had the earthquake in Japan, then you had the debt ceiling in the US, then it was Europe. After Europe, it's now
But
China.
Europe has remained constant throughout. That's
Europe's been constant, but it's sort of, sometimes it's more, you know, people are more vocal on it. Sometimes it's in the background, but the latest fear now is China. You know, China 5%, China 5%. So it's been a year where it's been very fashionable to be worried. But interestingly, if you look at the degree of worry that people had and the concerns, so far none of it's materialized to the degree that people thought it would.
Yeah, we had the background, of course, and at the foreground, Europe, you know, front and center, essentially. But also the noise out of China's changing. And how does that play out in what you're thinking? It's not quite as bad as people had predicted a few months ago, but it's still, the signs are cracking.
Well, I mean, if you look at the 5-year plan, it said quite clearly that they want growth to slow down, they want to rebalance their economy. So, you know, people are now coming out between 5 to 7% GDP growth. You know, they were talking about 7 in their 5-year plan. So it's kind of interesting that, you know, they told us kind of where they want the growth to be, and all of a sudden we seem to be surprised now that that's where it's kind of heading to. What's interesting is that, you know, if you look at the very long-term history of equity markets actually do better in lower growth environments and high growth environments. But for some reason, the psyche is high growth is good, low growth is bad. Whereas in Asia, you've made more money buying average earnings growth companies than you have high earnings growth companies, but people tend to forget that.
Right. Well, you know, you can't just use a broad brush and just talk about Asia in one lump. I mean, you've got to like certain bits of it and not like other bits so much.
So, you know, we like cyclicals in Asia, so we're long Korea, we're long Taiwan, we're long Hong Kong, a combination of cyclicals and financials.
South Korea is very cyclical, though, as an economy, isn't it? So,
well, this is the perception that it's very cyclical as an economy. However, you know, the economic beta to, say, G7 is just 1, so it's as cyclical as G7, no more, no less. And within an Asian ranking, it's 5th out of 10 economies. So perception is one thing, reality is slightly different. And our view is that, you know, the global growth environment is okay. I mean, it's not great. It's okay. Within that, Europe goes into a mild recession, but the US doesn't. And yet everyone is kind of the view that, you know, the world is in deep trouble. If you look at the equity markets where they are in terms of valuations, and you kind of say, okay, well, at these multiples historically, what's happened to earnings? And historically, earnings have fallen by a third. You then say, okay, when do earnings fall by a third? They normally fall when the whole world is in recession, not what we think is going to happen. So equity markets are pricing in a very different outcome.
Yeah, they are, and you know, they're ignoring some of the good news out there as well. And when you look at US earnings, for instance, I mean, okay, they may be down a fraction, but they're still remarkably strong by historical standards.
Well, I mean, US earnings have been doing well, and even if you look at the companies that have reported thus far, more of them have surprised to the upside than to the downside. If you look at the economic numbers around the world, actually, even in Europe, the numbers have actually been better than expected. And in the case of the US, this has been the case for a number of months. So the numbers are better than expected, but the perception is everything is worse than expected, and it just isn't.
Yeah, it's the whole thing of just a full of a feeling of pessimism out there, isn't it, Markus? Markus Rosgen from Citi.